And you didn't have to be a journalist, says Peter Wallison, the former general counsel of the Treasury Department.
Well, I'm sure congressmen and senators were very afraid. There was a real question in my mind whether Congress controlled Fannie Mae or Fannie Mae controlled Congress.
A question underscored in 2003. The Bush administration nevertheless decided to take on the mortgage giants. It recommended significant regulatory changes, as then Treasury Secretary John Snow told the House Financial Services Committee more supervision was needed for Fannie Mae and Freddie Mac, known in Washington terms as government-supported enterprises, or GSEs.
We need a strong, world-class regulatory agency to oversee the prudential operations of the GSEs.
I think we see entities that are fundamentally sound financially.
And Democratic Representative Barney Frank was then the ranking member of the Financial Services Committee.
The more pressure there is there, then the less I think we see in terms of affordable housing.
Affordable housing. That was the primary concern of Democrats, even in the face of increasingly dire warnings about Fannie and Freddie.
The affordable housing that Congress really wanted was the housing that Democrats represented. And when Fannie and Freddie supported affordable housing by buying subprime and similar kinds of weak loans, they got a lot of political support from Congress.
In the meantime, Fannie Mae and Freddie Mac had begun cooking their books. That made the situation seem less risky than it actually was. It also allowed Fannie and Freddie executives to keep pocketing huge bonuses for their lending efforts. They were finally caught in 2004. Fannie Mae Chairman Franklin Raines, who had been appointed by President Clinton, steps down. The Security and Exchange Commission is still investigating the accounting issues.
The accounting scandals were very important because what they did was convince some people, and some important people, that these were companies that really had to be watched. They were a threat. And one of those important people was the chairman of the Federal Reserve Board, Alan Greenspan.
If we fail to strengthen GSE regulation, we increase the possibility of insolvency and crisis. We put at risk our ability to preserve safe and sound financial markets in the United States.
But Fannie Mae and Freddie Mac still had powerful defenders. For instance, Democratic Senator Charles Schumer of New York.
Things are good in the housing market. Why are people entertaining radical change?
Chuck Schumer would go to an area of the state of New York. He would get Fannie Mae or Freddie Mac to make loans in that area. What they knew was that political support from Chuck Schumer was a very important thing for them. That would protect their privileges in Congress.
Fannie and Freddie spread around the campaign contributions, too. Democratic Senator Christopher Dodd of Connecticut has been the biggest recipient of money from Fannie Mae and Freddie Mac for the past 20 years, more than $165,000. And despite having been in the Senate only 3+ years, number 2 on that list, Barack Obama, with more than $126,000. The Republican who got the most donations, Utah Senator Robert Bennett, just under $108,000. For the record, Republican presidential nominee John McCain took $21,550. Fannie and Freddie's defenders stepped up big time in 2005 when the Bush administration renewed its call for action.
These large portfolios, unchecked in their growth over the last decade or so, pose a real problem.
The Senate Banking Committee adopted strong legislation which would have stopped Fannie and Freddie from acquiring these bad mortgages. All of the Republicans on the committee voted for it. All of the Democrats, including now Chairman Chris Dodd, voted against. But the Democrats were able to block a vote by the whole Senate.
None of the Democrats would support the bill that came out of the Senate Banking Committee. So a really tough bill that in 2005 could have actually prevented a lot of the problems we're seeing today, probably would have prevented the collapse of Fannie and Freddie
In 2006, Senate Republicans introduced another bill to deal with the mushrooming problem. One of its sponsors, John McCain.
McCain made a statement on the floor of the Senate saying that it was necessary to adopt this bill. He's always been an opponent of what he called corporate welfare. And Fannie and Freddie were, I would say, the poster children for corporate welfare.
But once again, the votes went along party lines. Republicans for, Democrats against. With the Democrats in the majority, the bill failed. As 2006 turned into 2007, the housing bubble was starting to burst. Bad mortgages began to default. And as the defaults started to rise, the entire portfolio of Fannie Mae and Freddie Mac was questioned. And with the entire structure heading for collapse, plenty of politicians have come around to the view that GSEs were a major contributor to the crisis, especially after major financial institutions that had invested heavily in their subprime securities began to go under.
A lot of what we're dealing with today has its origins in Fannie Mae and Freddie Mac.
The mismanagement of Fannie Mae and Freddie Mac, which was made possible by weak oversight and little accountability.
What is tragic and lamentable is that the ensuing calamity was entirely foreseeable and preventable.
Coming up, America's financial chickens come home to roost. This hour, we've told you how for years Congress failed to pass tougher oversight for Fannie Mae and Freddie Mac. That continuing lack of control allowed those two government-supported enterprises to keep pumping risky mortgage securities into our nation's financial system. The one thing the politicians couldn't control were the inexorable forces of the marketplace. The total amount of mortgage-backed debt Fannie and Freddie issued had gone from towering to truly scary, over $4 trillion near the beginning of 2008.
In the years from 2005 to 2007, they put about $1 trillion in subprime and other bad kinds of mortgages on their balance sheets in order, in my view, to prove to Congress that they still had a value.
But if politicians would not bring an end to the recklessness, economic factors would.
It now appears likely that real gross domestic product will not grow much, if at all, over the first half of 2008.
A huge increase in oil prices squeezed American families and businesses. Unemployment crept up. A small number of borrowers who shouldn't have been granted mortgages in the first place began to quit paying. Even though no more than 4% of subprime mortgages were in default by January 2008, the effect was disastrous. Like toxic time capsules, the subpar mortgage-backed securities that Fannie Mae and Freddie Mac had pumped into the financial system began to poison the institutions that had gobbled them up. The crash began in earnest in January. Remember Countrywide Financial, whose chairman Angelo Mozillo yelled at Wall Street Journal editor Paul Gigot for questioning the mortgage mania? Well, Countrywide had also cultivated Washington power brokers with perks, including reduced interest mortgage loans to, among others, Senate Banking Committee Chairman Chris Dodd. After 6 months of increasing signs of trouble, the country's largest and most aggressive mortgage lender suddenly changed hands.
Bank of America has officially announced that they will be taking over Countrywide Financial. It is now officially a done deal.
The damage done by Countrywide is enormous.
2 months later, a new wave of financial institutions started to fail. The first, Bear Stearns.
After working through the weekend and the night, a blockbuster deal on Wall Street is announced. JP Morgan is buying out its troubled investment rival.
The country's fifth largest securities firm first showed signs of trouble in mid-2007 when two of its mortgage hedge funds collapsed. By 2008, Bear Stearns was facing bankruptcy. After the Federal Reserve agreed to take $29 billion worth of toxic debt from Bear's balance sheet, JP Morgan Chase acquired Bear for $1.2 billion.
We should not expect to work through this process quickly, and we should expect some bumps on the road.
Bear Stearns' takeover was supposed to stem the tide. It didn't. July 11th, California's IndyMac Bancorp, a $32 billion savings and loan institution, was suddenly seized by federal insurers after depositors raced in bank runs like this to draw more than $11 billion in just 11 days.